And good morning, everybody. Wanted to go through Friday's price action, Friday's charts, show you guys where we had some really good entries and why we had those entries, what the precursors were for that chart for Friday, and where you had some really good trading opportunities. All right, here we are setting up at 9 a.m. This is 30 minutes before the market opens, or cash market. New York has already opened. It opened down here and it pulled back. So what am I looking at? I'm looking at the day before, which was Thursday. I saw this real big pullback down here. Okay, and then we saw selling off right there. Pull back to the 89 EMA, right in this area, which was an opportunity to possibly go short again. Well, if you went short again, it popped right back up here. So we had about a 50% pullback from 58.50 up to this guy, which was, let's take a look at that real fast. 58.50, yeah, see, we're having right around actually 61.8% pullback. So right there we go. So you can see that pullback form right there. There's a pullback there. There's a pullback there. Almost exactly that 58.60 point. So we're looking at a 61.8% pullback on this move, which basically says, look, we're going to the upside, baby. So what happens? We got a double bottom right here. And then here we go. We're heading north. So market hasn't opened for you guys that want to wait till cash market opens. Wait for your pullback. Wait for the pullback to 89 EMA. You already had an entry here off of the support off of the Murray Math lines. So we really don't have a whole lot of choice except to wait because we just violated the resistance. So there's your pre-market trade right there. You could have walked out. Excuse me. You could have walked out with with 20 points on the NQ. So where are we likely to go? Well, based on midnight open here, we're sitting at right around midnight open right in here. There we go. So midnight opens right around in here at 58.73, whatever, 58.72, 58.73, right there somewhere. So what we do is we measure from midnight open. How far did it go down? Went down to 58.50. So let me erase this. I'll show you how I did that. So we start out at 58.50, draw a line from 58.50 up to today's open, wherever that line is. And it can be approximate, it doesn't have to be exact. So now we have a box, right? We take this box and we flip it. So we want to flip this guy, 58.73.31 or so. So we want to flip it right there. There we go. The theory behind the rubber band trade is that as far as it pulls backward, it's going to go to the upside. So you're looking at a pretty much guaranteed, not a guarantee, I mean nothing's guaranteed in the market, but we're looking at probably an upside to 58.96, 58.97, 58.98, right around this area. Right around this area here. What I've done is I've projected the next four, when you look at the Murray Math levels, what's the next four up and the next four up? Because what happens is when these Murray Math levels shift, they'll shift in fours. So that major support right there, see that major support line? That will shift up and become, if it goes to the upside, that will shift up and become support right there. So that new 58.79 will be up here, and then you'll have your major support coming up here somewhere, and then 58.98.50 would be your resistance level. So let's see here. We're at 9 o'clock, so we've done our analysis. We've seen the pullback. We're saying, hey, you know what? Friday's probably going to go to the upside simply because you bottomed out right here. You've crossed up above the you violated or you touched the 89 pullback here twice. You got a double bottom, and now we're going back up, and to the upside, you violated that line there, which is where your pre-market pullback to 58.7750 or so. Okay, so you violated that. So we're going to the upside. So I would expect at cash market open, I would expect a pullback. 89, right around the 89 EMA. I expect it to go up to probably that reversal line, pull back to wherever the 89 EMA is, right around this area, and then go north. How far are we going to go today? Well, I've got that level there. I've got 58.9050. I've got a pivot point. I've got a projected high, and I've got a Morale H3 level here all the way up 58. And then I've got a daily pivot point at 59.1675 right up in here. So I'm thinking, hey, if this market gets a little momentum, it could go back up here. And then we've got what is that? 59.19. There's 59.19, which was a previous high right there, and you can see that line right there. So we're looking at right around 58, 59 was at 59.19. So looking, if the market gets enough momentum, they could buy up here. But we're certainly gonna go upside. I don't see us going back. I don't see us going back downside. Here's a little bit of congestion here, and then we came down here. A little bit of congestion here. We're going up here. Here's more congestion right here. Chop, if you want to call it. I got chop. I got a double bottom. Everything tells me we're going up. I've got a clear method line that says we're going up. I've got resistance up here, which is just about to shift. So let's go 30 minutes into the day. There's 9:30. There's my cash market open. Here's my pullback. There's my pullback to the 89 pre-market. If I were trading cash market, I still wouldn't take that entry. I wouldn't take it right here because the market tends to get a little squirrely at open. The market makers tend to kind of jerk it around here. So I still believe in the upside. Still believe up here. Okay, from here to here. I mean, I know that's a wide range, but I'm looking at somewhere right up in here. That pivot point. That's where I would put my I would buy somewhere down here, and I'm still waiting for a pullback. Remember, I would buy down. I would buy down here somewhere, and then I would probably sell it up here. Right. I would start looking at preliminary targets at my projected high, Morales H3, or that 59.19 area right here for an upside target, right in here somewhere. And of course, I have a pivot point there. I'm sorry, got a pivot point. So let's go 30 minutes. Then I go into the 30 minutes. Whoa, yeah, baby. What happened is, let me go back 30 minutes, and I'll just advance it 5 minutes. 5 minutes into it to kind of show you what's going on. Can't type today. Okay, so 5 minutes. So we're at 9:30. 5 minutes into it. Okay, whoa, we pull back. We pull back down here. This is a fake out right there. That's a fake out. So pull back to major. We're pulling back to major support resistance, which would be, if the Murray Math lines shift up, that's going to be probably going to be our new support level right here. So we pull back down to support. Our new support level. Murray Math line is sometimes a little laggy. So we pull back down to that major support resistance level. What's going to happen is that he will probably pop back up that way. This was a fake out. That was a beautiful fake out. We're fooling people. We're running stops here and convincing people that we're going to go short. Oh my God, I got that within the first 5 minutes. Oh my God, we're going to go short. We're going to go short. We're going to go short. So everybody jumps on the bandwagon. I don't have a volume chart up here, but I could probably tell you that people were jumping on the bandwagon for the short. So they grab the short, they go down, and what happens next 5 minutes? Bam, there we go. Now you'll notice the Murray Math lines have shifted. Again, we're going to the up. They've shifted from here. Here's still support from our pre-market, but here we go, back upside. So we've got 58.98. If they shift again, we're going to have a resistance, bottom resistance at 59.18, which is right at the top of this guy, 59.19. So I can shift it, anywhere up in here. I might shift it a little bit. I might just leave it at the pivot point, move it at 59.18 or back it off a little bit, anywhere right up in here. So I'm looking for a target. I'm looking for a target up here. And here's where your pullback was, back to your 80, back to your 89. We might get another pullback here, but I don't know. There's a lot of momentum there. See, from there to there, there's a lot of momentum. We're just about to hit our first target. I would have had my first target off right at 58.96, 58.97. 58.98.50 would be a first target off. If I had gotten into that trade to pull back to the 89. If you entered here, pull right back here, and then went north. Where was that? That pullback is 58.68.25. Well, let's see what happened 5 minutes ago, because these charts didn't shift. I want to look myself. It's kind of interesting. Okay, 58.68.50. There is our 58.68.50, which is our major support resistance. So pull back to major support resistance, 58.68.50. And there we go. And then you pull back to that major support resistance line and then headed north. So another confirmation. Murray Math line shifted up, projecting that we're going upside. So here we go. So got in on that. Hopefully you got in on that pullback. You were sharp enough to see that pullback. Otherwise, wait for a pullback to the 34 EMA right there. Since we missed the 89, it's a little bit. That was a less risky entry. Murray Math line shifted up. We had a pullback and then head north. Hey baby, we're going north. That's what the charts are basically. The charts are screaming. We're northbound and down. There we go. All the way up to 58.98.50, which would have been my first target. That would have been my first target off. Never had a pullback at 34, so I'd be sitting on the sidelines if I didn't grab this guy. That cyan candle right there, that was a clear method cyan candle, basically saying we're going to the upside. See, we had one there, but that was a fake pullback. Back down to major support resistance, bounced right out support resistance, and that major support resistance line. Now we're going to go back up. We're going back north. We came up here 59.05.25 at the top. This is a pullback. It's a pullback. That's also an in-trend buy entry. So that's another place where you could have a buy. That would be your secondary buy right there. If you didn't get it down here, here's your pullback. Here's your buy entry. Here we go. 5 more minutes. Here we pull back to the 89. That might have been a losing trade. You would have kept your stop if you'd have kept your stop close. Woo, here we go. Pull back to the 89. Almost down there, but see, it almost came right back down there. Hit the linear regression channel. Almost down to that 89 EMA. Bam, here we go upside again. So that's another, again, there was your good entry. Wait for the 89 pullback. Since we didn't have it, see, we pulled back past it. So we never really had an 89 EMA pullback after cash market opened. So there's your first one. Grab that if you got stopped out here. Grab this guy and then keep going, which would have more than made up for your loss down here, unless you didn't keep your stop relatively tight. That was between the 89 EMA here. If you'd got in right about there, which would have been 58.75 or so. From 58.75 down to 58.68, that's a pretty wide stop. I don't know too many people that would have that kind of a stop. That was 58.75 to 58.68, which is a 7-point stop. That's 28 ticks. So I'm not really sure there's a lot of people that would have done a 28 tick stop there and gotten that entry. So you would have lost out there, come back to pull back to today's open. You might have put an entry in here at today's open, which was 58.73 or so, 58.73.25. Yeah, 58.73.25. And you could have pulled a stop down here. You could have had your stop down here. 58.68.21. 58.68. What was that? 58.68.25. It pulled back to. So that was still a 5-point. That was still a 5-point stop there. So that was 20 ticks. I usually run a 25 tick stop, so I could have gotten in the pullback to today's open and not my stop not being taken out there. So here we go upside, pull back to the 89. There's your secondary entry for the long. We see 89 EMA is angling up. Everything's angling up. Everything was angling up at this point. This is the 34 flattening out, a little bit of pullback, and it says that 34, to me, that 34 starting to flatten out there says, we're going to chop. 13 is between the 34 and the 89. It looks like we're going to chop for a while. So what did we do? Let's see. Okay, we had another pullback to almost to the 89. And went north. A little bit of a pullback, so we got some chop action here. But I'm still hopeful. I still don't think we've exhausted this guy. And remember, we have one contract off here. Move my stop to break even. Down my entries down, somewhere down in here. So I'm good to go. I'm just going to wait. I'll hold on to trade all day long and set my stop to break even +2. So if it comes back in my face, I'm still on a low loss trade. I'm not going to make as much as I would have, but still on a loss trade. But I'm still believing in this upside. So I would have had my entry or my exit right around that daily pivot right there. You could have put a projected higher reversal or anywhere up here. 5 more minutes. We're at 10:25. Oops, came back down to my 89 EMA. I still haven't quite come down to my stop, which would be right around here. My entry would have been right on that cyan candle, major support resistance, right around 58.79, right around there somewhere. So it hadn't come down and taken me out. Came down to the bottom of the linear regression channel, bounced off that. Another opportunity for an entry right in here. Or just 89, here's another pullback entry to the upside. I still believe in the upside. We still 89 EMA still pointing up. We've still got, we don't have very, very deep pullbacks. That pullback from there to there was only, let's see what we're looking at. So you're only looking at like a 50% pullback. Didn't even, what is that, 58, maybe 59.05.25, right in there. So we didn't even come back to 61.8. So there's still more to the upside. So there was not a very deep pullback at all. So I'm still looking, I still believe in the upside. So we're looking at 10:30, 10:35. Still a little bit deeper pullback. Still a linear regression channel. I still haven't taken out my stop yet. Chop. Okay, now here we go to the upside. I've got still choppy, right? So I could pull my fill back over there, but I would probably still keep it right back up in here. Because this is just reading this chop. That's just choppy nonsense crap. I mean, if you want to get out, you can get out and walk away with your winnings for the day. Just abandon the trade. You'd still got the entry here, so you're still making ticks. But you could have just walked away and said, I'm out of here. I'm going to go to lunch, whatever. I'm going to go to an early lunch. Here's 11 o'clock. Almost. Here's 11 o'clock. So it's choppy. You don't want to mess with it. You could get out. Here is 11 o'clock. going to the upside. We're still choppy. So here comes back up to 58.9850. That is kind of my range between support resistance and that resistance line there. So we're chopping a range. So I'm not going to believe in the downside unless we violate 58.79. If we violate 58.9850, we're going to shift up and we're going to go. My next resistance point would be 59.18. So which is right where my daily pivot point is. So 5 more minutes. We're at 11:20, 11:25. Here's 11:30. Still choppy, but okay, we just violated that resistance point, that resistance line. We're probably there's probably more upside to this. See, everything's starting to curl up. The T310's curling up, T35, my 13 EMA, my 34 EMA, my 89 EMA. My 89 EMA, see that? Never flattened out. Even though price action chopped on both sides of that thing never flattened out. Still to the upside. Still to the upside, still the upside, still the upside. Pull back entry to the 13. Here we go. And more upside. Where are we going? Where are we going? Where are we going? There's 59.09. See, we already violated our previous top. So the next top is going to be 59.19. So I'm looking at a Murray Math level of, say, 59.18 or that daily pivot point 59.1675. Either way, that would I'm still in the trade. Still in the trade. I'm right up here. So this is 12:04, 12:10, 12:15, 12:20. Farting around. It's lunchtime in New York. All the traders are going to. Everybody's going. All senior traders are going to lunch. Here you go. 59.13. Starting to buy up. So I would still be in that trade. Still looking at that guy. I would have. And people go, well, would you have moved your stop up? I typically don't move it. I've said this before in some other videos. I typically don't move my stop up, and the reason why is because if it comes down in my face, I've seen that come down. I've seen the big major fake outs, all this chop. It'll let you survive through all this chop and hit your target up here, because the market makers they'll fake you out. I mean, they'll sell it off almost back down to where your entry was. But that's where they had their entry. They had an entry down here, right in this area. They probably had an entry down in here. They had a pullback entry here for a couple of. There's a double bottom right there. They knew the upside, so they grabbed an entry down here, and they're just sitting on it. They go, hey, I'll sit on it and see how far this goes. So they're looking at a projection of, say, 50, 60 points for the day. From way down here, from today's open, today's low, which was 58.50, which was that oversold line, which is kind of interesting. Today's low bounced right off the oversold. So Murray Math lines are valid for the people that kind of scratch their heads and wonder how valid these things are. And I can show you this on any chart. Okay, here we go, 59.14, and bam, 59.18.25. So if you'd had your fill at 59.16.75, you would have gotten fill, or 59.18. So either way, hey, bam, there you go. You're good to go. See that 59.19 up there? Still didn't touch that 59.19. And we'll see. There's 12:54. At that particular point, it's like 1 o'clock. I'm done. I'm done for the day. Don't get back to the market in the afternoon what you made in the morning. So anyway, I would be done. I'd make my ticks. I'm good to go. So what did it do the rest of the day? Let's stop. Well, we can go. Where are we? Okay, there's let's see where we are. 1329.06. Okay. I just want to run it up to 1330. Okay, so we're at 1330 now. Let me go back to 30 minutes so we can kind of fast forward to the afternoon. Fast forward to the afternoon. See another 34 pullback if you wanted to. I wouldn't play the afternoon because, you know, who knows? I mean, they've already hit the daily pivot right here. That Murray math line, here's today's high. They didn't quite come up to 59.19. It's Friday afternoon. I'd be going home and letting the market chop and play and do whatever it wants to. And so see that? See all those indecision candles there. Just chop, chop, chop. Chop and more chop, chop, chop. We've got another resistance line. Ah, there we go. That resistance line flipped back up to 59.18 with, with more, looks like more upside. So more upside to come. More upside. 59.37.50, 59.57, may be possible. I doubt it for the rest of the day because we're already at 3 o'clock. There's 3:30. Pullback city. Here we go. See, now everything's starting to turn down. So I think the long is done for the day. What do you guys think? 15:30. Yeah, 3:30 in the afternoon, New York time. I think we're done. And then, bam, cash market closes. There's our cash market close. So, and then let me stop it and show you where it ended up. Here we are. So, that's our chart. That's our chart for the end of the day. I still think we're going to pop through that 59.19. I still think there's more of the upside to this guy. We'll see on Friday or on Sunday afternoon. You see another, you know, I'm still looking at another pullback to that 89 EMA for the upside. If it violates that 89 EMA, we're going to go back down. And you can see the magic. Look at the magic of that 89 EMA. Look at that puppy. Pull back to 89. It's pointing up. We're going upside. Come down, blah, blah, blah. Okay, we got downside right there. Unfortunately, it didn't give you a pullback entry. This was pretty, you know, after market on Thursday, you know, just a huge sell-off. Huge sell-off. So we're up here. I guess the Europeans considered it to be, or the Asians considered it to be overvalued. So they started pulling. So they started selling it off. So the Asian market opened at 7 o'clock, I guess it was, European Asian market. So there was the Asian high, and they just said, forget this nonsense. So sell off, baby, sell off. Down to what they considered to be a more reasonable level. And then back to the upside. 58.9664. There's your support level, 58.79. Your entry right in here for the long again. And pull back entry, pull back, and then north to that 59.18 resistance to your daily pivot right there, and you're out of the trade. So that was a nice 58.79 to say even 59.1675, 59. Say we'll call it 59.18 since that's the bottom resistance. It's not a bad trade. So pull up my calculator here and find out. So from 59.18 to 58.79, right around there. That's 156 ticks. Okay. Times 5. That's a $780 move right there. So if you had 2 contracts on that thing, that's $1,600 right there. That's a nice little trade just for sitting there and sitting on your hands and having the patience to wait for that pivot point, wait for that resistance, wait for that. And remember, we saw that 59.18 level. Where did we see that guy? Let me see, where did we see that guy? I'll fast forward right back through the charts and see. And this is valuable analysis. If you go back through the chart, you go back through the chart and you start looking for Okay, where'd the market go? Now, how would I have known that beforehand? Well, I got a 59.1675. I have a daily pivot up here. I've got another line up here, which is that previous high at 59.19. I've got that, so I've got upside. So why not? I mean, it was very, very clear where the market was going. Now that here's a daily pivot point. The next time I saw that was what? We're by 10 o'clock. By 10 o'clock, you know, you've got that day. You've got that 59.18 point up there. So that's the bottom of the next resistance scale. When the Murray mass shifts up, that's where we would go. That'd be the bottom of resistance, and that's where I would have gotten out. So you've got the bottom of resistance, projected bottom resistance there at 59.18. You had your daily pivot point right there at 59.1675. So, hey, what's not to like about Friday's chart, man? This was beautiful. So by 10 o'clock, you knew pretty much where the market was going to go, or had a really good idea. And now at the end, hey, there's your day. There, Friday had a pullback, had a little rubber band trade there if you wanted to get out, major support resistance, or if you wanted to do that and get out and walk away. So that was at 9:45 in the morning. So there's a nice little trade from here to major support resistance from here to here. Nice little trade. 58.79, 58.98.50. That's 25 points right there. That's 100 ticks. That's not bad. That's $500. Walk away with $500 for the day, or just, you know, wait till this guy. So 15 minutes into your trading day, you're done. You made your $500. You walk away. You're good for the day. Anyway, I hope you guys enjoyed this. I hope you guys got something out of it. Again, real simple, fast, simple, quick and easy. Just the Murray math support. By the way, the Murray math support lines are projected off of the 5-minute. I've got a 5-minute chart here, and the Murray math lines from the 5-minute chart are projected onto this guy. I thought about going to a 10-minute, but it's kind of 6 1/2 dozen of the other. I do like this 15-10 chart. It keeps you in the trend. It's much more clear and indicating trend than any other thing that I've seen. If I go to like a 20 or a 40 tick chart, I don't get any entries. So anyway, I hope you guys enjoyed it. Hope you got something out of it. See you next week.